Hey guys, welcome to this special Q&A video. We're joined today by Matt Zarb-Cousin, Director of Clean Up Gambling, a campaign group pushing for the reform of UK gambling. He's come onto the show to answer questions about the collapse of Football Index. Known as the world's first football stock market, Football Index recently had its operating licence suspended by the UK and Jersey gambling commissions in what the Daily Mail labelled as the biggest failure of a gambling business in British history. If you're watching this video, you're probably wanting to know if the users of the Football Index platform, who've lost a reported £90 million, will get their money back, and whether the people responsible for the scandal will be punished. Without further ado, let me introduce today's guest. Matt, thanks so much for joining us today. We've got a lot to get through, including a lot of questions from Twitter. So tell us, Football Index, where did it all go wrong?
Well, thanks, Alex. So Football Index, for people who don't know, was a stock market where you could trade footballers. So you weren't actually buying shares in real footballers. You were buying shares in assets that were sort of created by Football Index that represented different footballers. And if you bought shares in a player, then you would get dividends based on their performance. So things like goals, assists, clean sheets, positive media coverage, lots of different factors that dictated how much of a dividend yield that player would generate. So when you trade or invest in conventional stocks and shares, you're buying a share in a company, and that company generates profit, and from that profit, it pays dividends. With this model, the shares were not generating any underlying value. It wasn't like a footballer was making money and therefore that money was paid out in dividends to that footballer's shareholders. It was an imaginary asset. And there's some debate as to whether the business model could ever have worked. Certainly, I think towards the end, they were so reliant on new users coming into the platform and minting new shares to create more revenue in the short term to pay the existing obligations that they had to their user base, that it did resemble more a pyramid scheme. And unfortunately, as I say, there is a debate still as to whether this business model could ever have worked, because Football Index were taking commissions on the trades, and they were obviously taking, when they were minting shares in players, all of that money that they were generating from selling those shares, that was obviously going to Football Index as well. But the problem was the dividend liabilities were increasing every time they minted new shares, and they were accruing as time went on. And as time went on, they couldn't afford to pay those liabilities. So then what they did was they cut the dividends. And this obviously, given that the shares have no real underlying value other than the dividends that are likely to be paid out on the players. So the value of the shares is dependent on, anticipation of certain dividend yield. If you cut the dividends, the value collapses. So there was effectively a run on the stock market that they'd created. And as a result, as you've mentioned, about 90 million in liquidity was sucked out, and lots of people have lost life-altering sums of money. And yes, I mean, this is a case that I think has illuminated a number of different problems with existing gambling regulation. The most urgent being that there's no ombudsman. There's nothing by way of consumer redress for customers who have been misled or missold a particular product or unfairly treated. The regulation is just simply not fit for purpose. The Gambling Commission was notified about the business model, the risks of the business model, back in January 2020. It took 5 months to investigate. And since they commenced the investigation to last week or a couple of weeks ago when they suspended the license, Football Index were allowed to portray themselves as being in a much more much safer and prosperous position than was the reality. They were announcing sponsorship deals with QPR. They were announcing partnerships with NASDAQ. They were effectively encouraging more and more people to sign up to the platform and invest more. And I've spoken to lots of people who, even in that period where the Gambling Commission was investigating, that kind of 12-month period from the investigation starting to the license being suspended, they invested the most that they'd ever invested in the platform in that period, tens of thousands, some people. So this has been a disaster. And, you know, I think the Daily Mail's description is correct. This is the biggest disaster in the history of British gambling. And it falls squarely, in my view, at the feet of the not fit for purpose regulatory framework that this country has sadly been lumbered with, and successive governments have failed to address. So I'm hoping this will be a wake-up call, but it's a bit too little too late for the people that have been affected by this. So that's why I've been working very closely with the law firm Lee Day, and we're hoping to, they're investigating possible causes of action, which will hopefully provide some means for redress for the people that have been affected by it.
Fantastic stuff, Matt. I mean, we'll dive into lots of these areas. I've got a big list of questions, and do you know what? I'm just going to go into the questions from Twitter in no particular order. At JW Nichols asks, was Football Index a pyramid scam from the outset?
I don't know. That's a good question. I mean, to me, if you've got 2% of customers saying they lose, compared to 75% of customers of conventional gambling, which is results of a survey that Football Index have published. I mean, it suggests to me that there was something not quite right. And, you know, I think if you ever get into a position where your liabilities can only be honoured if you have a constant flow of new money coming in, I think that is a very definition of a pyramid scheme. But I accept the question was, did it start out like that? I don't know. Maybe they thought they could make it work. Maybe there was a way to make it work. Maybe if they hadn't had paid such high dividends, maybe it would have worked. But then you wouldn't have had all of these people joining the platform. You had a lot of happy customers and investors because everyone was getting good dividends, and their value of their investments was going up, and it was attracting more people to the platform. And I think that even if it didn't start as a pyramid scheme, even if there was a way where it could have been operated where it wasn't a pyramid scheme, i.e. lower dividends, or you know, if the bets actually expired after 3 years, which is what they're supposed to do, and that didn't seem to happen. Maybe that would have worked, but I think that they wanted to prioritize growing the company at the expense of sustainability. They took a massive gamble, and they obviously thought, you know, if we pay high dividends and we go all out on customer acquisition, then we can, you know, it's a risk, but we can grow the business. And I just think they got greedy. And it became, because of the business model, it was very easy for it to then sort of seamlessly transition into a pyramid scheme. I don't even think that the people you know, some of the key people involved maybe even understood what they were doing. Maybe that's a bit generous, but it seems to me like we've got a community of people who use this product, who tried their very best and you know, to understand the market, who believed they understood the market and they understood the product and how it was viable and sustainable. That's why they invested the money that they did. And I think I've seen some explanations for how a product like this might work, or how it could work in theory, that frankly are far more intellectually rigorous than anything I've seen the executives come out with. I think this is, really it's a product and a company that didn't deserve the community that was so loyal to it for so long. I think that the community, the FI community, I feel very, very sorry for, because I think that they've been massively let down by the people in charge.
No, for sure. Leading on from your answer there, at FI_psychology says this: does Matt feel the Football Index concept could work outside of the gambling industry, taking the concept has such a loyal following and was enjoyed by many in tandem with the supporting of European football? Football Index and watching football is a bit like steak and chips. They just go together. What are your thoughts?
Quite possibly. I don't know. I think maybe if you had, maybe if it was regulated by the FCA, Financial Conduct Authority, and you had liquidity controls, and you had, if the shares were minted by the platform and the dividends were much lower, and it was a genuine market that had all the regulations that a stock market should have. Because I think they tried to have the best of both worlds, right? They tried to be a gambling product that didn't need all of those things that, so we're regulated, we're a gambling product, it's betting, so therefore we don't need to do any of the things that spread betting firms have to do. For example, we have to have certain liquidity controls and all that kind of stuff. They weren't obligated to really have any of the protections in place, because gambling is very under-regulated by comparison. But at the same time, they wanted to be seen as an investment product, and that was how they lots of people rationalized putting so much money into this platform, because they saw it as an alternative to investing, and that was how they marketed it. So could it work in theory? Possibly, under a different regulatory framework, with different rules and a different model. I don't think it would look anything like what Football Index looked like towards the end, particularly. So I think a lot of people would be very disappointed with, I think, how a sustainable version of Football Index would look. But I don't know. I just don't think that the money has to come from somewhere to pay the dividends, and if it's not coming from minting the shares, then where is it coming from? It has to be a genuine kind of free market. The assets should be created, and the market needs to be a free stock market where the assets can be traded, and there needs to be regulation of that. You can't just have a platform that has created the stock market, has created the assets, is paying the dividends, because then that is what ended up happening, was they had too much power effectively, and they were able to really just forego their obligations to try to grow the amount of users, which is completely irresponsible. So yeah, under another guise, possibly.
So FI_Melanchester asks, what ramifications do you think the Football Index saga will have on the wider gambling industry in the UK? Do you expect we'll see even tighter regulation after what happened?
Well, I would have thought so. I mean, look, I'm concerned, number one, about getting redress for the people that have been affected by this, right? It's made me so angry that this has been allowed to happen. And people expect a standard of regulation and a standard of consumer protection. And in my view, with something like gambling, that should be higher than in other areas of the economy and other consumer sectors. And it should be higher because it's one of those very rare activities where you are effectively at odds with, no pun intended, the person that's selling you the product. There is an antagonism there. There's a winner and a loser. So you have to have regulation, because all the logic of the market, which is that, you know, it's in the interests of vendors to, you know, compete on price and customer service and all that stuff, that's undercut by gambling, the very nature of gambling and gambling products, because there is, as I say, there's a winner and a loser. So you end up with this kind of very extractive culture where operators try to, you know, effectively extract as much as they can from customers, and they do it in pretty unscrupulous ways, a lot of operators. Now, people expect, nevertheless, that there to be at least a basic standard of consumer protection. They expect that if something has been licensed and regulated by the Gambling Commission and sold in a particular way, and they're allowed the legitimacy of sponsoring Nottingham Forest and QPR and partnering with NASDAQ, that I think people are entitled to think that they should at least be afforded a basic level of consumer protection. Unfortunately, that isn't the case in this country. In this country, gamblers are not treated like other consumers. And we can debate whether the Gambling Commission or regulating is the appropriate regulator for something like Football Index, or whether it should be considered a gambling product or an investment product or whatever. Unfortunately, it is regulated as gambling. And that is the worst possible thing, I think, for consumers in this country. So I feel my heart goes out to people that have been affected. I think it's appalling. I think it was avoidable if you had a regulator that was fit for purpose. If you had a government department that wasn't obsessed with growth, with growing the gambling industry at all costs, as if this is the most important objective when it comes to gambling, and the regulation of gambling is facilitating a growing industry. You know, we'll license something first and we'll ask the questions later. Well, now I'm pushing as much as I can for public inquiry. And I think that there has to be an independent public inquiry into how this happened. Who knew what and when? I want to know who knew what at the Gambling Commission, why they took 5 months to act. I want to know who knew what at the Department of Culture, Media and Sport, which ministers knew. I want to know which civil servants knew. And frankly, if it is as we suspect, that this has been a failure in oversight, you know, I think a lot of evidence has pointed to that already, then I think it calls into question their suitability to be leading the gambling review. Nevertheless, the gambling review absolutely has to, as a priority, reform the Gambling Commission or abolish it and replace it with something else. Make sure it's properly resourced, because it's got a £19 million budget for a year compared to £14 billion that the gambling industry generates, and get put in place an ombudsman that can actually pursue matters of consumer redress. Because it shouldn't fall to me and Clean Up Gambling and Lead Day and the FI Action Group. There should be an infrastructure in place with all this money that's sloshing around in the industry. The idea that we haven't got the resources, or there's nowhere we can find the resources to actually fund an ombudsman or appropriate regulation, it infuriates me, Alex. Really, really does. It absolutely infuriates me. Because if you're going to legalize something like gambling, then you should regulate it properly. It follows. One follows the other. If you're not regulating it properly, there's not much point legalizing it. Do you know what I mean? Do you know what I'm saying? Like, the whole point of legalizing something is to something that's harmful, potentially harmful, or where there is like an unusual kind of quirk in the, you know, as I mentioned, the antagonism between the consumer and the vendor, is that you regulate it properly. Otherwise, it's no better than the black market. Otherwise, it's no better than illegal gambling. So, you know, this is what infuriates me so much. And I think the reputation of British gambling will be affected by this as it plays out. We're in the early days yet, it's the early stages, but I think that the ramifications of this haven't fully been felt, but they will definitely impact the gambling review.
No, I was going to say, What does the collapse of Football Index say about its board members, advisors, and shareholders, many of which are some of the gambling industry's best known names? What are your thoughts?
Well, again, many of these people would have been personal management license holders that would have been issued licenses directly by the Gambling Commission. And you just have to question that as well, the suitability of these people to be anywhere near gambling businesses. All I can say at this stage is that the investigation being carried out by Lead A and that we are supporting will leave no stone unturned. And we will, if there is a cause of action, then we'll find it. If there are multiple, then we will pursue them. So I think anyone who's been involved with this and presided over what's happened should be utterly ashamed of themselves. And hopefully there will be justice at some stage.
So Matt, I suppose the key questions: where's the money gone? The £90 million. Will people get their money back? And then who is responsible, and will they be punished?
Yeah, good questions. We don't know where the 90 million has gone. We don't know where the money is. Obviously, the value of these assets was determined by how much people would pay for them. And if you've cut the dividends, people aren't going to pay for them. So there was an inability for people to sell their portfolios, so realise the value in the portfolios in cash terms. So if there is money somewhere, whether it's one of the holding companies or whatever, then we'll find it and we'll pursue the relevant causes of action. And I would encourage everyone to have a look at what Lead A are doing, and if you're interested, to sign up. And just to manage expectations, it's probably going to be 3 or 4 months before the investigation is complete and we've actually figured out how best to approach this. But it is, we've got the best people on the job, basically. So if we can do something can be done, then it will be.
At FI_back3 asks, it's quite a long question, how would you advise people to stay away from possibly joining similar type of products, as I now see many ex-Football Index Twitter profiles pushing affiliate schemes for other platforms, and come to terms that they had an addiction to FI and that would be unwise to repeat? What are your thoughts on that?
Yeah, I mean, look, I speak as someone who was addicted to gambling when I was younger, and I know how addictive it can be. And I've looked at this product, and yeah, I can see how addictive it would be, particularly if the market's always going up and you're getting good dividend yield and all that stuff. Of course, I mean, anyone could get addicted to that. So, of course, people are going to be looking for ways to fill that void. I feel like there's lots of people that have been grieving for not just the money that they've lost, but also a hobby that they've lost and the community that was built around it. And of course, there's going to be, a feeling that that needs to be replaced in some way. And obviously, we're going to try and replace the money, but it's going to be very difficult to replace the community and the product. And what I would just say, people are obviously free to do what they want and deal with it however they feel is best. But I don't think that if something like Football Index was viable in the form that it either became or started out as, then it would be, I think it would have been bought by now by someone else. But look, let's see what happens in the next few months. If it gets bought again and the show's back on the road, then then it suggests that it was just a few poor management decisions. If it's something more fundamental and structural, then I would steer clear of any products like this, because they're only going to go the same way. If you're just subject to the whims of owners of a private company who can change the terms of a bet overnight, or who can use money that was earmarked for dividends that they've accrued through minting shares to instead market the platform to drive new users. If your money is not safe in platforms like that aren't properly regulated, that don't have the necessary oversight. So if you are going to get involved in something like that, then don't put more money in than you can afford to lose. And lots of people, obviously, that wasn't the case with Football Index, and I totally understand why, because of the way it was marketed. But that's all I would say. It's just the usual rules of betting, safer gambling should apply if you do go down that route.
Okay, got several questions to go through, Matt. We'll see what we can squeeze in. At Ben FI Index asks, do you think the Gambling Commission can be held financially liable by the legal action that's happening?
Well, let's see if there's a cause of action against the Gambling Commission, which I suspect there probably is. Then let's see. It's usually very difficult to bring an action against the regulator, but there may well be in this case. And I think, to be honest, the best route for determining whether the Gambling Commission is culpable would be through some sort of public inquiry. And that public inquiry has to be carried out outside of the government department and the regulator. So that's what I'm pushing for. And if public inquiry was to find that there's been systemic and serious failures in regulation and oversight, and people were, this product was misrepresented and people were harmed as a result, then that could mean that they're financially liable. But we have to take it step by step, and we're still in the early stages of determining what the causes of action are. But as I say, in parallel to that, I'm constantly pushing for a public inquiry.
At Buzzing Paul, he asked two questions actually. To what extent do you believe the Gambling Commission failed in its objective to ensure that gambling is conducted in a fair and open way? He also asks, in your opinion, Matt, which elements of the Bet Index product does the Gambling Commission not consider gambling?
So the first question, well, I don't think it has upheld any of the licensing objectives in the Gambling Act. I think the Gambling Commission has failed to uphold any of them. Fair and open gambling. The gambling is not associated with crime. Well, we know that they've failed to prevent that, and that it shouldn't harm the young and vulnerable. So we know that people are getting harmed all the time. So look, in this particular instance, yeah, I mean, to be able to change the terms and conditions with 30 days notice without having to notify the Gambling Commission, and to then cut the dividends, which is effectively changing the terms of a bet, again, without notifying the Gambling Commission, or without the Gambling Commission needing to be notified, that's not fair and open. And the problem isn't the licensing objectives, it's the fact that the Gambling Commission is able to interpret them so loosely. And like, if you look at like what they consider fair and open, it's effectively, it just amounts to, well, the game needs to be played, and it needs to be played by the rules, and the rules need to be published somewhere. I mean, that, and it needs to be played legally. This is all tautological. Of course, like, of course, a game has to be played by the rules, and the rules are determined by the operator. That's not fair and open for the consumer. It just gives way too much power to the operator, and the operator, as we know, in this case, Football Index, could just change the rules. And as long as those rules were published somewhere, that's fair and open, according to the Gambling Commission's loose interpretation of the licensing objectives. So the licensing objectives need to be either codified to a much higher, more rigorous standard, or the regulator needs to really get to grips with what consumer protection actually entails, because this, I think, is another thing that really highlights just how inadequate they are. And sorry, what was the other one? Sorry, I've done it again.
Yeah, and the other question was, in your opinion, which elements of the Bet Index product does the Gambling Commission not consider gambling?
I don't think the Gambling Commission understood the product at all, or the business model. I think that the principle of effectively placing a futures bet on a futures trade, or a bet on a player and their performance over a period of 3 years, and so if I buy a share, for argument's sake, for £1 in a player, and I get paid out over those 3 years £1.20 in dividends, then I've made money on that share, and I could sell the share back into the market. I mean, it's the fact that you can sell the bet back into the market if it before it expires, if it indeed does expire, and the fact that that bet then becomes an asset that's tradable. None of these things, I think, were understood by the Commission, and if they were understood, then they should have recognised that this wasn't really falling under their regulation. This should have been something that the FCA was having to look at too. So the short answer is I don't think they understood much of it, to be perfectly honest. And even when it was pointed out to them that something like this was probably not sustainable, they took 5 months to investigate it properly.
I was going to say, you've been quoted as saying the Gambling Commission have been asleep at the wheel, which I think it's fair to say is true. A couple more questions.
I said that before this report came out that they'd seen in January 2020. I'd probably revise that now and say that they were dosed up on ketamine and 10 pints deep at the wheel, to be honest. I mean, driving off a cliff. Sorry, anyway.
We'll keep that bit in. We'll use that as a soundbite, Viewers that don't already know, Matt was the guy that coined fixed or betting terminals as the crack cocaine of gambling, which maybe we can use a new soundbite now for the Football Index. Okay, last few questions. Let's get to this one. At Bainesy 1985 asks, do you realistically think that the bosses at Football Index will face justice for what they have done?
Well, I hope so. That's what we're working towards. They certainly never, operate in this sector again, which is something. I mean, the reputational damage has been enough, and to ensure that should never happen now. But we want to get to the bottom of it. We want to get to the bottom of what happened at the company, at the regulator, at the government department. I think there are a lot of people who, frankly, are responsible for this, and it's not just the people that happen to be sort of carrying the can at the end. I think there's there's a chain of events that took place, and we are leaving no stone unturned. As I say, we've got the very best people looking into this, and we'll be pursuing everyone who we believe is responsible.
Nice one. Well, talking of this, at Cruncher Form asks a couple of questions. Firstly, what criteria will Lee Day use when deciding if the outcome of the administration is acceptable for us or not?
Investigation into possible causes of action can happen in parallel to any administration. So that's what we'll be doing. If the administration doesn't yield satisfactory outcome, then we will. I mean, I don't think it. To be honest, I don't think it will. I don't think that they are going to be able to get the show back on the road. I think that the idea that they're going to get funding and they're going to get a buyer, we'll see, but I don't think it's really realistic. That can run its course, and we can pursue other avenues for redress in the meantime, and that's the intention for the next 3 or 4 months.
Yeah, I was going to say, the other question from @Cruncherform was, if there is a finite pot of money left in the Football Index and the administration decides to feed it all back to the customers somehow, then would legal action be necessary? So I guess you've almost answered that already.
Well, the only money that's ring-fenced for the customers, and by ring-fenced I mean it can't be used for any other thing, can't be used for the administrators, it can't be used for fighting legal action, it can't be used for anything else, restructuring the company. The ring-fenced money is about £4.5 million. And we believe that amounts to the cash balances in the platform and maybe some dividend liabilities, but I don't know. It's not a lot. And this is what so the money isn't in that company. That's why they've gone into administration. The money is somewhere else, and that's what we're going to try and find. We're trying to find where the money is, and then we're going to pursue the appropriate channels.
What are your thoughts, by the way, on the sudden departure of Neil MacArthur, at the Gambling Commission CEO? Was he pushed before he was shoved?
Quite possibly. I know that he was off for a while. This may have been the last straw. Who knows? I'm speculating. But I think that, for what it's worth, I think the problem runs a lot deeper than Neil. I think it's been a shambles since the 2005 Gambling Act. I think that it's in the wrong government department. I think that they are totally ill-equipped to understand the harm that gambling can do and the need for far more robust regulation. I think that, if the Gambling Commission has to operate under the parameters that are set by the Department of Culture, Media and Sport in its current form, then it will always, unfortunately, fall short of what is necessary in terms of regulation. Whoever's in charge, you're trying to reconcile these impossible forces of a government department that's kind of almost hell-bent on growing a sector that it knows that is harming people in the process because of the business model. 60% of the profits coming from 5% of customers, and then the Gambling Commission at the same time is trying to mitigate the harms. Is totally incompatible. So whoever's in that role is going to find it difficult. Now, I think that obviously there's been serious failures at the Gambling Commission, and that would all, I hope, come out in some kind of public inquiry. But that remains to be seen. It remains to be seen who is responsible, basically. But I think I suspect it runs much deeper than an individual.
So, Matt, final question: what's your advice and tips to the users of Football Index, especially maybe around their mental health? And do you agree that there's maybe a high suicide risk amongst the community?
Unfortunately, yeah, I do. I think there is a high suicide risk, and I think it's that should be on the conscience of every single person who has contributed to this mess. And I think it's appalling. So look, help and support is there if you need it. It's an unusual situation, though, Alex. I mean, it's regulated as gambling. It was a gambling platform to an extent, in the conventional sense, but it's the people that have lost a lot of money are not gambling addicts. So it is difficult for me in that respect to feel qualified to advise them. I think that they've been scammed, basically, and it's more like that than experience gambling harm and become addicted. And so I just go do everything I can to try and get the money back, or as much of it as we can, and that's all I can do, really. So sign up to the League A investigation, and keep talking to other people in the community, keep talking to each other and supporting each other, and hopefully we'll make some progress soon.
Nice one, Matt. Thank you so much for joining us today, and I wish you all the best with the court case and all your busy work with Lee Day. So thanks for taking the time to speak with us today. Thank you.
Thanks, Alex. Cheers.